One of the common things that I hear from traders I mentor, and particularly new traders, is I had a plan but I didn't stick to it. And they're frustrated as to why they didn't stick to it. They want to know, why didn't I stick to my plan? And a lot of this comes down to questions about the quality of your plan, and also why it is that you don't want to take that situation on, because people are willing to take on trades that don't have it. Now, a lot of this can boil down to responsibility, ultimately. If you have a plan and you take the trade on and it doesn't work, then this effectively reflects badly on you, that your plan was wrong. But what you have to appreciate is that every plan has an element of potential to go wrong. That is the risk in trading. Every plan can go wrong. But if you trade without a plan, it's very easy to go, oh yeah, well I went into the trade without a plan, it went wrong, I didn't really think it through. It takes the responsibility away from you. Whereas if it's well planned out and well thought out and you lose, it feels a lot more of a personal defeat. That's one of the reasons. The other reasons that people often don't act on plans is that they don't actually have a particularly strong plan. The plan is relatively vague and falls on the idea of, well, if we fall down here, I'll buy it. That's not a strong enough plan. And one of the things you have to ask yourself there is, if you have a plan, unless it is really solid, you're always going to struggle to get into the trade. So one of the things you have to do is say to yourself, right, this is the plan. Am I willing to commit to this if it gets to that point? And if it is quite vague, the answer is probably not. The worst mistake people make there is then going, I'll just do it with small size. Or if they trade S&P, they'll go, I'll just do it with a micro. Doing that basically says, I don't think this plan's that great, but I want to have a go, but I don't want to lose that much money if it goes wrong. Again, shift in responsibility. You look at the trade and you have to say, if you're not willing to fully commit to this trade, to put the size on that you think it deserves, it's not a plan. It is a weak idea. And so that then says to you, right, you need to get a stronger plan, something that you can fully commit to on a trade. And the final thing to really remember with a plan is that not committing to your plan has very bad long-term implications. The biggest failing that a trader can make is not taking on a trade that doesn't work and losing money. It's not maintaining consistency of approach. If you consistently approach the trade as this is the plan and execute, you can improve that because you can see why the trade didn't work. If you don't do that, there's no way to learn how to improve anything, because you're taking ad hoc trades. It might work, it might not, but you're never going to know why it works and why it doesn't. So that's crucial. Having a plan is not about whether that individual trade wins or loses. It's about the long-term implications of that, and not sticking to a plan in the long term ultimately will lead to your career falling off a cliff, and that will be the end of it. If you stick to a plan, you can always change that and adapt it, and that will prevent that drop and save you a significant amount of money. It will also enable you to grow as a trader because you can constantly improve, develop better plans, and become more committed to ideas. Bear that in mind next time you look at a trade and think, oh, I'm not sure about this. If you have a plan, stick to it. The worst thing you can do is not stick to your plan. I'll leave you there, guys. Click subscribe, click on notifications. I'll be back with more videos soon.